All right, welcome back to Asset Coach and Tax Strategist. And we're still in our series on financial distributors. And like I had said before, I have no idea how many episodes this will be. And so it's really, I think this is really important to understand. And this kind of leads into understanding assets. So we may end up just shifting from financial distributors into an asset series, understanding different types of assets, and just what's the purpose. And so this is all kind of coming to a crescendo and understanding the books that I wrote, Economic Termites. So we did a series on that on economic termites, and so go check out those. And then my book, Farming Assets, and all this stuff that we're going through is in those two books. And I think it's really important to understand this as a baseline because how or why are you going to do what you're going to do? You may know what something is, but as we said in the last few episodes, what's your why? What's your purpose? What's the motivation to do this? And so you don't understand the rules and how, at least the basics, what we're trying to show here, then how do you know what you're doing if it makes any sense? And all of this content, everything we're sharing is because of my 20 plus years of working with physicians and business owners and hearing them tell me their situation, their concerns, their annoyances, their complaints, their successes, what they like. And so, well, what's the best thing to do is create something that meets their needs and where they're at. And so that's where all of this kind of stems from, is just providing you more and more information. So I think this may be our last episode in this series of financial distributors before we start diving into the actual assets themselves. Now, one of the things I told you we're going to dive into is so we talked about alternative assets. Now we're going to dive into more of these are kind of like bank investment products and insurance products. These are all kind of meet all three. We're going to talk about derivatives, and then we're going to also talk about collateralized debt obligations, CDOs, or also what may be called CMOs, collateralized mortgage obligations. It's a different type of debt, CDO. So let's kind of dive into this. Again, we're not going to the weeds. I'm not giving you investment advice. There is zero investment advice. This is all information, education for you, to help you understand what's out there. And you need to be an accredited investor to really have access to a lot of this stuff. Now, if you're not an accredited investor, there may be non-accredited investor funds that some of the companies out there will have created funds. But if that's the case, I still am leery as if this is a good fit for you as a non-accredited investor in a fund. Okay. But again, I'm not giving financial advice. I don't know you. I don't know your situation. This is just my opinion, talking out loud into the ether of not knowing who you are. So let's dive into the derivatives. And what are they? A derivative is a security whose underlying assets dictates its pricing, risk, and basic term structure. Investor use derivatives to hedge a position. Hedge meaning basically do the opposite. So like when you've heard the terminology of hedging inflation, well, inflation's going up, so we should probably find some type of alternative asset or another asset that provides something that is the opposite of inflation, so it could hedge it, it can offset it, so to speak. Increase leverage, right? What was leverage? Debt, right? So there is a form of debtation. Is that a word? I just created that word. There is a form of debtation that allows for that leverage to occur and to speculate on an asset's movement. So again, you're speculating, but aren't you doing that with stocks? Aren't you doing that with bonds? Aren't you speculating? You're not personally speculating. You're having a financial advisor, a mutual fund company, a professional fund manager speculate, because there's no guarantee. There's risk, no guarantee and risk in everything. So isn't everything a speculation? Kind of is. But Notice what you're not going to see in these types of conversations when you're talking about alternative assets, such as this area, CDOs, anything else alternative. You're not going to hear risk tolerance, asset allocation, diversification. You're not going to hear asset class. You're not going to hear the terminology because you're an accredited investor. Okay. And these don't focus on those. Those aren't part of the box we were talking about before. Okay. So derivatives can be bought or sold over the counter or on exchange. Okay. Include options, swaps, and futures and forward contracts. Okay. So this is an area that is way different. And this is a niche of a niche of a niche, basically. So you got to, because options are a niche within investing, swaps are a niche within options and investing, futures are a niche within investing. It just some risk associated with derivatives include market risk, liquidity risk, and leverage risk. Okay, that's it. Those are some of the risks. Okay, so let's see here. Terms, the derivatives can initially confuse familiarity with lingo, helped use counterparts, blah, blah, blah. Okay. So each derivative has an underlying asset. Okay. So that's the key. That's what makes us something. It has an asset underneath it. Okay. So there's something there and it dictates that pricing. So it dictates the risk and it dictates the basic terms of the structure of that. But there has to be an underlying asset. If there's no underlying asset, then it's make believe. Poof. Doesn't exist. Okay. But you have to have an actual asset. It could be anything from stocks, bonds to commodities or economic indicators. What the heck's an economic indicator? Let's click on that. Love this. Isn't this exciting? An economic derivative is an over-the-counter contract. Well, notice when you see contract, that means that two parties are agreeing. Okay, this is a legal thing in which the payout is based on the future value of an economic indicator. That gave us no information. It is similar to a derivative. Okay. An economic is over the counter. Economic indicators includes things like national unemployment rate, non-farm payrolls. Oh, so just like Vegas, that's what this is like, right? I'm not saying it's like Vegas, but think about it. When you go to Vegas, right, you can bet on who's going to be the NFL, the championship, the Super Bowl champion. You can bet on who's going to be the rookie of the year. You can bet on who's going to be the most valuable player. You can bet on, bet on, bet on, bet on. This is the financial investment equivalent of Vegas. That's awesome. Again, none of my members are in this area, right? This is an area that I'm not a betting man. That this is not I am not comfortable with any of that conversation just now. But anyway, so let's go back to where we were at. But I thought it was interesting. I'd never heard of economic indicators, and but that's pretty interesting, right? So structures of derivatives may feature a strike price, a call price. These are all within the normal option lingo. Okay. So again, entirely separate language. This is a separate language. This is a language within a language within a language. And then you have English. Okay. So highly, highly, highly accredited, very, very, very niche. Okay. I can't say this enough because I want to make sure you understand. I'm not suggesting this. I'm just giving explanation and information. This is stuff that exists out there. And it creates wealth, but at the flip side, it creates non-wealth as well. Okay. Huge. So many derivatives force an investor to take a bullish stance with a long position, a bearish stance with a short position. So you hear people shorting the market, or a neutral stance with a hedge position. There's your three options: long, short, hedge. Okay. And all three of these can be within a long, or short features based on this world. It's a fascinating. And then you can use the leverage to increase your opportunity. So you can go borrow money or put assets up for collateral, borrow money to take a bigger position in an area that you think. So this is like when you hear certain people shorting a stock. If they say, okay, I have $100,000, I'm going to short this stock. But then if they use leverage and they use that 100,000 to get $1 million to short that, that's a 10 times. That's a huge. But at the same time, if it doesn't go the direction you think it will, you owe 900, right? So there's the risk reward. If you take calculated risks that you understand and where what you're trying to accomplish, you have the potential of earning a greater reward. Now, collateralized debt obligation, what is the underlying asset? Debt. It's mortgages, it's debt that's out there. So it's a structure, a financial product backed by a pool of loans and other assets. Okay. An underlying asset serves as collateral for the loan goes into it. So the most common would be real estate, right? But it's not the only, right? You have different tranches or different poolings of these backed by risky subprime mortgages. That's what caused the 07, 09, right? So they used mortgages that as the underlying asset for those homes, but that mortgage was a high risk mortgage, right? Because it was subprime. People who were buying houses that didn't qualify to buy that house. They made it up, right? Just tell me what your income is, and then you can have the house. And that's some of the loans were income-based loans. Crazy. Let's see here. Understanding collateralized debt obligations are transform a collection of individual loans into structured products. So what will happen is that you'll have a group that will buy debt. Okay. They'll package up the debt and sell this debt off to investors. Now, it could be to create a rate of return for those investors, right? So because that debt that they're buying has a interest to it, so that could be being passed on to them. It could be a debt. Here's where it could be very beneficial is there where it's a group of debt, but that's assets, right? It's all backed by assets. Remember that it's all backed by assets to where that particular investor or investment company or whoever that purchases that group of assets uses that assets as leverage to jump into another investment in another asset class. But this whole asset becomes a collateral to that leverage. Just a contract, two parties agreeing. And if both parties agree, there you go. And it's all based on understanding the types of debt, the mortgages. So if you have A debt, right, A grade debt, then is it safe? Safer than subprime mortgages and subprime debt, right? So it's safer. So if it's safer, then could that be a stable asset for them to use as collateral to get a larger sum of money to put that money into something else? Could be. Could be. So, but this is what that alternative world works in, and we don't do this for our members. We stick with very basic needs of humanity, right? That to me, this stuff gets into the area of greed that is not necessarily where we play in with our members. It's too much for us in my opinion. But roof over your head, food on your table, the very basic human needs is where we focus on, because there's such great opportunity to accumulate wealth and reduce taxes in that area that why wouldn't we? Right? That's what the tax code tells us that we can do. And it makes the most sense. We don't have to risk a lot of our members' situation by going beyond things that are very speculative. Remember in one of the episodes, we talked about a speculative, right? So we don't need to speculate. We still are taking risk because there's nothing's guaranteed. There is risk in everything, but it's being able to understand and manage and maintain that risk based on what you're trying to accomplish. Okay. Oh, that's right. I think I brought this up. What's your why? Why are you doing this? What's your purpose for what you're doing? And not what, but why is the what. Okay, so that's very important. So I hope you had as much fun in these episodes as I did in this series. I think this is such great information, not because I'm sitting here talking. It's because this is a world that's out there and it exists. And you may not even know that this exists. And now you do. And now you're that much more educated than the average person to understand that your accreditation as an accredited investor, what's that mean to you? And this is knowledge is power, right? No, the implementation of knowledge. So we want to build this knowledge so we can implement it, right? Cash is not king, it's storage of cash. So you can create cash flow. So the flow of cash is king. And so we want to take this implementation of knowledge to create cash flow so you can be a king and queen and understanding how this happens. And then that's what's building wealth. And that's what gives you access to the tax code and reduce your taxes and the fraternal twins of wealth and taxes. You see how it all combines? But you got to understand these basics first to see how all these basics lead to what can be, right? But again, it all starts with why you want to do this. What's your purpose? And I think it's so, so important. So thanks so much for joining us. We really appreciate it. We again having a blast. Our next series, assets. I have no idea what that's going to look like. I have an idea, I guess I could say. I have an idea what that's going to look like, but I don't have an idea. Maybe we break it up into multiple assets. Man, I don't know. But here's what I do know. If you subscribe, every Thursday we drop a new episode. So by subscribing, you will be notified that we've dropped an episode, so you can start continuing this process of learning. And by the way, all of this is also in our membership. So all of this we have in our membership. So if you're a binge watcher, join membership and you'll get farming assets, you'll get our tax return academy, you'll get access to our various strategies, including our alternative asset strategies. There's just so much that we provide, but it's not for everybody, and we get that as well. So anyways, thanks so much. Make it a great day. God bless.